Hello friends, welcome back to my channel. Today we are analyzing Nasdaq ETF and SPY ETF, which are representative of the Nasdaq overall 100 stocks, and SPY represents the S&P 500 ETF. And let's look at what has happened last week for the day of 5th of June, Friday, and we see a large amount of selling happening on Friday, 5th June. And you can look at here, the market came off, or at least Nasdaq came down close to 5% in one single day. And it's interesting observation. Most of the market earning events happen with a big spike in volume, and we are seeing this after a long time, at least for more than a couple of months now. The rally has been going on in the Nasdaq ETF, and it was also marked by this turnaround we see here on 31st March 2026, where the move of for close to 3.5% happened in one single day, with a relatively high volume in recent times of anywhere from last 10 days or more. So we have not seen such a bullish closing with highest volume in single day in last 10 trading sessions. So this marked on 31st March marked the day where the market told us that hey, it wants to go higher, or at least the downtrend from the Iran war correction was almost close to an end, and this marked the beginning of the upside rally for 2 months. Now we are seeing quite opposite, where we are seeing similar volume, or big large volume, twice the average volume. On one single day we got 99 million here, and the average 50-day volume is 45 million. And this also is happened on a red closing day, a big red closing day, which closed on the bottom of the day. So this is also marking the transition from the bullish move to more of a correction move or bearish move, and it may still continue to fall for some time or correct for some time and then stop the downfall. Let's look at Fibonacci levels and see if it were to correct, how far it could go down. So we'll use the Fibonacci tool, and this is, if you connect the highs and lows of this whole move, the top bottom points on the Nasdaq, all the way from 556 to 750-ish roughly, you see that 50% retracement is somewhere around 652, and close to 38% or 0.618 extension is around 675. So this gives you roughly around levels of 675 to 650 as probable levels at short term correction, and let's see how much that is, that it could be if it were to fall to 50% correction. So you could see from top tick to bottom tick, if it were to pull back 50%, is anywhere from 13% correction. Right now we are at close to 6% correction on the ETF. So it could go 6% much lower from here, and it could also come to the same recent all-time high, which is around 640-ish levels. So good range is between 650 to 640 probable levels. It may not happen within a day or two, but more likely it may play out within the next 2 to 3 months. And worst timing for market is generally September, where we tend to see a lot of bottoms in the market. So look out for those on the Nasdaq ETF. Also, let's look at SPY and see what the story is there. A similar story, I think we can see much more clear on the SPY, where on 31st March we saw a volume a lot higher than the average volume, and this marked 31st March mark the turnaround for the SPY. And similarly, as we can see, for the last 2 months we didn't see such a big volume in SPY for selling days, and this also happened on Friday for SPY. On a single day we have seen close to 2.5% of downside on the SPY. So even on SPY, if you use the same tool, we can look at similar levels. You can flip either ways and you can get 50% measurement on the Fibonacci tool. So the levels that we could see if the price were to correct is around 695 to between 710. So look for levels between 710 to 695. What it means in total correction is around worst case scenario of 9% or 7% roughly. So correction of 7 to 9% is more likely possible on SPY over next 2 to 3 months if things continue to go on downside. So watch out for those levels on SPY. So that's all we have for this week, and just be careful with the overall market not behaving as expected, and correction is set to begin. Thank you. Have a good weekend.